And welcome back to another episode of Real As It Gets. Gordo, we are on episode 18, my friend, and we've been on a little bit of a hiatus.
We took a few weeks off, had a little bit of travel in there, a little bit of some summer fun time with family, and now we are back at it.
It is summertime. We've had some pretty good weather, I'd say, and like you said, it's good to kind of take a break when it seems like everybody else is taking a break.
Right.
And I think that's a good theme of where this kind of episode is going, because I really want to dive into where I see fall going. And I'm curious your thoughts on that, because we want people to stay, especially because I think we're going to get really into the nitty gritty, both the good and the bad, and give a bit of a high overview of this cloud that may be shaping the fall market.
And I think it's important, to stay to the end and like hear what we have to say, and then come back, check back at the end of, December. Were we right or were we completely wrong?
I think we're going to, it's going to be, I don't think we know too. That's the issue.
Know. Nobody knows.
So since we've been on it, so you're back, you were kind of all over different continents and whatnot, and had some fun with the fam. We both were in Vancouver at some point in time, crossed over, and now we're back to real estate.
We are.
And how are you feeling being back?
I'm feeling great. It's nice to have time off, but it's like certainly nice to be back at it and get, back in the swing of things, back in the fold, and rolling up the sleeves and getting at it.
All right, beauty. So what I think to start us off here is, how have you been finding the summer market? And I don't know about you, but I feel like summer came a little early this year, in the sense that we all, as realtors, are used to, I always say August and December are notoriously the slowest months of the year. But I felt like August kind of came real early, almost like, I don't know if it was World Cup or...
Because it slowed down more, you're saying?
It slowed down a lot quicker.
Oh, well, I think the spring market came faster than we expected. I think that's what almost started earlier.
Yeah.
January, February, things were moving pretty well. And then it started to slow down after that. So, and as you mentioned, like August, December, the real estate market typically follows the school season and the school year. And so, a lot of people are away in August, July.
Most traveled month of the year too. Yeah. Both
so
of them.
It's expected to be slow.
Yeah.
I guess the question is going to be, what's going to happen in September? Is it going to ramp up again? Or, is there pent up demand? Some people are saying that's the case.
So we'll get to fall, because usually, generally speaking, we all look to Labor Day, and after Labor Day is the start of the fall market, and it usually goes to about mid-November, but we'll get to it in one second. This current market, how are you feeling now? What are you seeing from like sales standpoint, condos, freehold, the market in general? Do you still think stuff is moving? Are you having, a harder time getting even people through the door? I have my thoughts, but I'll let you go first.
Look, it's I think when we look back to what happened in COVID or even before COVID, everybody got kind of used to the fact that you put a house on the market, you wait 5 days, you got 20 people bidding on it. That's not normal. That's not real. And for like decades before that happened, that wasn't the market. You have to put a house on the market. You have to find a buyer.
Might take 60 days.
Time.
Yeah. Maybe even longer.
And I mean, there's realtors in the industry that have never experienced a market where we weren't holding offers.
Yeah.
They haven't experienced that. I think we are back to more of a normal market, and it kind of goes to my philosophy of what's going to happen down the road. But the people that are transacting in real estate now they're getting married, they're getting divorced, they're getting relocated, they're getting promoted, they had kids, their kids moved out, normal situations. So there's properties are transacting. It's taking longer, and sometimes it's taking longer because the inventory that's on the market, a lot of it's overpriced.
Yeah.
So it's not even really a factor to me. It's just we're waiting for when something comes along that's priced properly and it's marketed properly. Guess what? It sells.
Yeah. And would you say, because you said a normal market, so would you say it's more of a balanced market or a buyer's market right now?
Well, if you look at the stats, like,
months of inventory,
it's leaning towards a buyer's market. But again, I go back to the fact where, some of the inventory, I think it's skewed because it's overpriced.
Yeah.
It's sitting there because it's not like if it's a property sitting for a year.
There's also it's also very specific too, which is interesting to me because we just had this actually happen about 10 days ago. And we noticed that, I'm going to speak on Oakville market specifically. We noticed that there's like this threshold of pretty much, if you're looking at a freehold detached home, up to like 1.4, you really don't find anything that's really turnkey, that's 4-bedroom, 4-bathroom, doesn't really exist.
Right.
And then you would think, okay, well, maybe if I can make my budget from 1.4 to 1.6, it would be there. There's really not. It started at like the 1.7 and up kind of range for a true 4-bed, 4-bath. Now, this one came out in Falgarwood specifically, 4-bed, 4-bath, a bit smaller, and everything else around it and that had sold was indicating that, like, you know, it's a tough market. 3 days on the market, we were one offer, there was another offer, and another one, 3 total.
And what was it priced at?
It was priced at 1.5.5.
1.5, what did it sell for?
So you would think in 3 offers, right? It maybe would go over, would you say?
I'd say it probably didn't.
So all 3 of us were under asking to start, and we got it for asking.
Right.
And we still had all our conditions in there. And truthfully, again, I think it was very interesting because maybe come fall, if there is more of that inventory that's in that price range, I still think that's going to fly, because if you are looking for a 4-bed, 4-bath and you are kind of priced out of the upper range, right? There's really nothing to pick from. And you have to either settle for something that's smaller and then it doesn't really work for you and your family, right? So, but then on the other hand, we have stuff that we even did together that, like, we were the, you know, from a price per square foot standpoint, we're like this shiny gem, yet we couldn't even get a showing.
Right.
And so it's still this kind of like all over the place. But I think you hit the nail on the head that it's still the stuff that is obviously priced right and is desirable for, I agree. I think it's a lot of this upsizer
right. And
product.
I'm going to guess like your client is probably a young family, maybe looking
Correct.
for the next bigger.
Yeah.
So those are the people that are buying. We're not seeing investors buying real estate right now, especially in the condo market.
Yeah. And the condo market's I think we saved that for almost a different episode. I was reading something, they were saying it's not going to bottom out now to maybe 2028. And I'm not saying that from a negative standpoint. Stuff is still moving in the condo market, but you need to be very dialed in on price. We are talking pre-2018 numbers, and you have to, we were at one point, like, from a price per square foot standpoint for a penthouse, I joked, I'm like, we're the cheapest penthouse in frickin' North America.
Yeah.
We couldn't even, we still got it done.
Yep.
And everybody's happy, but it's crazy out there when you think about it. Like, it's hard to even just get people through the door at times.
Right. And there's less people looking. And again, it goes back to investors. I think there's less investors wanting to purchase condos right now.
And we can talk about that actually on a different episode, is like foreign buyer prohibition.
Right.
What are they going to do in 2027? How will that maybe shape the condo market? And the irony in all of this is people are complaining, be like, we need them back because the prices are dropping. But that's why they put it in, for exactly the prices to come down.
Because before we need to take them out because the prices are too expensive.
Exactly. And now they're like, I can't get my money out. I can't sell.
Yeah.
It's like, well, beggars can't be choosers, right?
Yeah.
Okay. So generally speaking, high overview, there still is a lot of activity. I feel like even some of my stuff that maybe were listed a little bit high, we are still getting showings. We are getting good feedback, but I would say activity for sure is up. I feel like, at least from a showing standpoint, it seemed like July was really dead. Early August, I've noticed a bit of an uptick. I've been speaking to a lot of our colleagues too. It seems like that as well. But it seems like still a lot of the activity is a little bit of tire kicking.
I think so. And I think people are waiting. Like, there's no rush for people to just make sort of some kind of a concession and take something because they feel like they need to.
Yeah.
There's always more. And I think, especially with the fall market coming, there's going to be more inventory coming. So maybe people in August are like, well, let's just wait to September and see something better comes along.
Perfect segue here. Okay. So generally speaking, us as realtors, we're like, hey guys, maybe wait till the fall market, especially right now.
Right.
I'm telling people, like, you're so close to fall anyways. Let's wait till after Labor Day. Yes, there could be more supply, more competition, but there could also be a lot more demand, right? Because our mindsets, we almost follow the same thing, right? Over and over. It's like, oh, if nobody's doing it, I don't want to do it. But if everyone's doing it, now I'm ready to go.
Yeah.
So coming into fall market, Gord, before I give kind of my thoughts there, what are you anticipating to happen for this fall market? You think it's going to be a standard, expecting a lot of activity, or with, trade negotiations, world economy, a lot of moving parts in the background. I think from a bank standpoint, interest rates seem pretty safe in that we're not going to see too much fluctuating. What are your thoughts?
So I think the market's going to remain pretty stable to where it is now.
Okay.
I don't think the amount of the amount of buyers that are coming into the market isn't really going to change. It's going to be, again, kind of going back to a normal market. It's people getting married, divorced, relocating, promotions, that kind of thing, having babies, upsizing, downsizing. Like, to me, the investors, real estate investors, they're not in the market right now, specifically in the condo market, but also freehold towns. Like, so if, think about if you have, say, $200,000 to invest, your options are put it in the real estate market, which is a little bit uncertain, or we've got this phenomenal industrial revolution happening around us called AI. Would you maybe look what the stock market's doing, right? So I think the average investor,
people are making money.
They're making money.
Yep.
So if you had $200,000, you're better to put it into an ETF that's maybe weighted on some AI companies, or hope that you're going to make 4% a year, purchasing a townhome or a condo in
that you're living in, that you're also paying yourself, for sure.
Right. So for that reason and that reason alone, I think that it's real estate's all supply and demand, right? So when you take out the demand from the investors, now you've just got regular people like end users buying and selling. That takes a lot of people out of the market for the time being. So for that reason, I think the market's going to remain pretty flat. I don't think we're going to maybe 1% either way. I don't think it's going to change much more than that. And I think the properties that are going to be selling are exactly the one you like you talked about in Falgarwood, where it's priced properly. It shows nice.
There's
nothing to do. So when people are upsizing and they're stretching their budget, and they don't have another $250,000 to perhaps renovate a main floor or something. So that's what I think is going to happen. I think you're going to see properties that are nice, move-in condition, priced properly, no problem selling.
Turnkey, yeah. And that's what's been consistent this whole year.
Yeah.
Now, not everything. So a lot of conversations leading up to this point in time was the moment these homes are on sale, I can't wait. I can't, we can't picture that 1.7 home now being only worth 1.3. And when that day happens, I'm going to attack. And then that day is now. We're currently in that market.
Yeah.
And it still seems like there's a little bit of reservation. And then we talked about, obviously, there's this outlier of things we can't control of what's going to happen in the world. But at the same time, if you have been investing your money and doing these things, you probably do have that down payment for the most part to take advantage of this market. Yet it doesn't seem like things are clicking. So do you think you will see a little bit more of, say, consumer confidence that's hey, I've had enough, things really are on sale, let's kind of attack now? Or do you think it is still going to be very balanced like we've seen all at the beginning here? Because I know you answered in a way, but I wanted to say that to kind of
I think it's going to remain. I think it's going to remain balanced in the fact that unless there's some sort of urgency, we have to sell our parents' home because they're no longer in it, and we can't afford to pay the monthly fees or pay the taxes. Those kind of situations. But where there's no urgency, hey, we'd like to get a bigger house, maybe this year, maybe next year, not in a big rush. So I don't think the urgency is there. Remember in COVID, the urgency was there because if you didn't buy a house this week, next week is going to cost you more, and it could cost you $100,000 more. That urgency is gone. The risk to wait now is it might cost you less if you wait a month. Right?
Okay, so this is a good segue here. Now you use the word urgency. I think this is good. So I'm going to use the word trigger rate, and let me get through this.
Okay.
So this is not to be negative or pessimistic, but this is something that's actually going to happen now in real time, where I talked about at the very beginning. I said, what is this cloud that we're all unsure of?
Right.
So we're entering a very specific point in time that I don't think we've seen really in a real estate market for a long period of time. But from September 2021 to February 2022 was the biggest run from a appreciation
absolutely.
standpoint.
Hockey stick.
In real estate. So why I'm bringing this up is because the majority of those people did take the 5-year fix. The majority of those people have been paying their mortgages. They're hopefully not over leveraged. They probably put a good chunk of change down. But unfortunately, time sometimes doesn't work in your favor. The reason I'm saying that is because if we looked at a whole high overview standpoint of the real estate market, generally speaking, between September and February, if you compared it year over year, there's a lot of homes that might be in that 20 to as high as 30% range of a loss of value.
Right.
Okay, from a price standpoint. Now here's the word trigger rate. So if you've been paying your mortgage, you still have a good job, you are going to requalify. We were talking to our in-house mortgage guy here. He said, generally speaking, people's costs from a carrying the home standpoint will increase 18% from 5 years ago. So from a monthly standpoint, which I think most Canadians can handle. The problem is, Gord, is of these people that maybe are now their home is worth 20 to 25% less, their mortgage and what it's worth are now closer to that loan to value ratio of like 100%.
Right.
They can't be at that.
Right.
In comes the trigger rate where they say, okay, you're a great individual, AAA, we have no issues with you, Mr. and Mrs. Owners, but you need to come up with $100,000 to get it back in line. Now you can't do a HELOC because technically there's no equity in the home. So, Gord, the reason I'm bringing this all up, and there's this cloud of like, one, what are banks going to do? Are they going to maybe massage that in and give people a free pass? Two, could we see the normal wave of supply that we see in a fall market come, but then you have this additional supply that compounds to the people that's saying, I might not be able to stay in my home. I can't afford to
stay in my house. Yeah.
And then three, we don't have that demand. Now you really have an interesting wave, because I think between now, personally, I'm not saying it's going to be bad. I want to be very clear with that. But I think between now and I think that's why, too, real as it gets, we're keeping it real, because it can't just be sunshine and rainbows. But I think it is going to be a little rocky until pretty much, let's say, mid to late spring next year. And I do think the narrative will change, because then, remember, as fast as they want, they start falling off a cliff. And I think now the comparables from that 5-year high or whatever will now be actually, hey, you might be more level, right? So the narrative changed. But with all that information I just spat at you, because there's a lot there, now what do you think maybe from a fall market standpoint?
Well, I mean, from what you've said, I mean, obviously it could be worse.
Yes.
Right? So
do you think any of that will happen?
For sure it will happen. I mean, I've had clients that have had to sell their house because their mortgage rate went up so much they couldn't carry it. Yeah. It's a horrible thing to have to sit in someone's living room and,
I've
walk
had
them through.
3 phone calls, 3. And the reason I used 100, but one was 50,000, one was 75, and one was 100.
Yeah.
And they asked me to do a letter of opinion to send to the bank to be like, hey, look at what these actually sold for, because they're being told to come up with X amount.
Right.
Now, they can probably do it, but it puts a big strain. And how many of those people now, because it's happening now, September, remember, went on that. We went way up.
So I think the people that took variable rate are in a better situation because that increase happened over time.
Correct.
And so they were able to make adjustments to it.
Yeah, they weathered that storm.
They weathered the storm.
Yeah.
I think the people that are in fixed and their mortgages are renewing, it's going to be a bitter pill to swallow. And it's, they're either going to have to make lifestyle changes and hopefully not have to, downsize or find a different solution for where they live. But I think, in some cases it's going to be inevitable, but in others, 5 years has passed, perhaps, if it's a dual income family, maybe both individuals got promotions, both people are making a little bit more money. Maybe there's a side hustle and they're able to make it work. That's what I hope. And I think too, it's going to come down to whether or not they do have that trigger rate issue. Right.
And if there's not, because I don't think the 18% increase monthly cost is going to really, it sucks, but I don't think that's going to move the needle. But it's like, do you have the money in reserve to offset that? If you don't, what is the bank going to do? Yeah. And the amount of mortgages that are up for renewal, like the dollar amount is staggering. 1 in 3 over the next 12 months are due for renewal. Yeah. So it's going to be, it's billions of dollars. It's going to be pretty wild. And the good news is banks don't want everybody defaulting because that's not good for business. And I'm not saying that from a negative standpoint. I'm just saying in general, there's a lot of this stuff that's up in the air that we don't really know what's going to happen. And I think if you're thinking of getting into the market because of all that uncertainty and because of all these things, there's going to be some juicy deals out there. I think
There
that
could be.
people are really like, and not from a juicy deal standpoint of like somebody losing their home, but I'm more saying from just not a fear element, but like, hey, I want to get this going. I've been seeing how tough it's been for the rest of 2026. We've been waiting. Let's get it on fall.
Right.
Let's sell this. And if you've been thinking of upsizing, right, specifically, probably those guys are going to be the biggest winners.
I think so.
There may be no other time than come spring, because I do think come next year, I think we're talking a whole different ballgame, especially if you have say that again, Trev, foreign buyer prohibition lifted. You start seeing that gap between condos and freehold getting bigger. That's going to make the condo market get a little spicy and get exciting. And then you're going to see a little bit more consumer confidence, right? And then the media picks it up and like, oh, real estate's going. And then everybody that has FOMO is like, I got to get in. And then here we go.
And we talked about this before with the foreign buyer ban. Like, nobody's really talking about it. You don't hear it in the news, but that honestly, it's had the biggest impact on the market.
Let's go right now.
Bar none.
Quick. Do you think they keep it or don't?
I think they'll keep it.
I think they will too.
Yeah. Because
it's working.
It's working. And just because the fact that, if it gets out of hand, which it would, I think, pretty quickly, because prices have come down now, there'll be so many, Canadians that are in trouble and not able to afford a home. And like, we need more affordable housing.
Yep.
So that's the reason they brought it in, and it is working. So, yeah.
And then the other thing could be that we actually don't see this supply because people just are content. They're like, they're not going to move money. They're a little bit, money's a little tight. They're going to hold off on the renovations.
It's also the job market, right? There's fear of losing your job.
Exactly. And then you have no supply and then you have this built up demand, and then it goes the other way a lot sooner. And that's why I said that cloud, because like, it's not a negative cloud. It's just, we don't know.
We don't know.
And there's a lot of things at play.
Yeah. And then obviously you have the tariff situation, which I feel like that's kind of
the last couple of days.
I think we're going to get to somewhere pretty. So I think by the end of this quarter, I think it's going to be, something's going to be in place. It just can't happen. It can't.
It's a win. Like America, they're way bigger and I get it, but they do need this to happen too. Like, we're their biggest trade partner. Like, come on.
Yeah.
What are we doing here? So we'll see there.
So what's your prediction for the fall? So I said it's going to be pretty flat. What do you think? Where do you think it's going to go?
I think we're going to see a lot more activity. I think prices will drop, not significantly, but I think you'll see prices go down. I think from a sales standpoint, sales will be up, prices will be down. And I think it will be still, I lean towards more of a buyer's market than a balanced market. But I do think that the stuff that is, because it is way easier to get a mortgage, even though we're coming full circle, it is easier to get a mortgage for something that is done than it is to have the cash to make it that finished product. So like from a renovation standpoint. So I do think that stuff, the turnkey stuff, will remain hot. And if it is priced like it is, and it maybe there's that doubt like we talked about, and it starts going down a little bit, I think you're gonna have a lot of people jumping in being like, okay, I can get this forever home, I can get this stepping stone home. Why? Like, now's the time, right?
Do you think speculators are gonna be back in the market?
I don't know, Gord. Speculators. They're never in the market.
No, but someone buys a bungalow in Lauren Park and sits on it for 3 years because they want to build a home there.
Yeah.
We're not seeing that. And the other thing we're not seeing, and I'm glad we're not seeing it, but it's foreclosures. You don't see too many.
Well, and that goes to
in 08, 09, we saw it like.
But that goes to the whole trigger rate scenario.
I don't think banks want it. I don't think they want to see that.
I'm with you. I don't know, because that creates a whole issue. But the 1 in 3 Canadians, that's a lot of people.
Yep.
So I don't know how you massage it in to be like, hey, you're not going to all of a sudden be like, well, we'll change the amortization. Or maybe you can say, hey, we'll build in that $50,000 over the next 5 years of term.
Right.
And you pay a little bit higher, right? But at least you're not having to come up with the physical cash. It's easier to maintain a monthly standpoint.
Right. Yeah.
And maybe some people, maybe it's not as bad, right? Maybe prices go up.
Yeah. And I don't think, for a lot of families, like I said, they've probably planned for it, or they've, over the last 5 years, they've had time to prepare.
Yeah.
And their income situation is better than it was 5 years ago.
I think the fall market will be a very good indicator for the Febs
for 2027.
because that is like, we compare that in every single office meeting. And every single office meeting on average in the GTA is down 25% minimum.
Yeah.
Oakville, some 30 and whatever neighborhoods, right? That will be very interesting. Those guys might, and how many people bought, because there was a ton, remember, of sales.
Well, and I like at the beginning of this year, I was telling like people that were thinking of selling this year, I said, do it quickly because there's going to be pent up demand from December and the outlook's not good. And it was like January, February were good months this year.
Yeah.
Looking back.
Oh, crazy.
Right?
Even remember, we were talking about April, May. We're like, wow, this is a really healthy. And then June, that's why I said I didn't know if it was the FIFA World Cup but it just seemed like summer came early where just the lights went off.
I think it's because spring came earlier. The spring, like January, February was busy.
Spring has generally come a little bit earlier now these days. I feel like January, February seems to be like mid-Jan is like, oh, it's freaking ice cold out. I'm going to go look at homes. I don't get it.
Yeah.
Yeah.
I feel like, well, this year for sure it was better.
Yeah.
So,
well, better than the 25. Okay. Yeah. Well, I feel like we gave them a ton of information.
Absolutely. Yeah.
And if anybody wants to comment or feels like we kind of skirted over something that we need to clarify more, comment below. Let us know. They probably most of our friends and family that watch this have our numbers. No, I'm teasing. But anything else, Gord, before we head it off?
Yeah, I think that's it. Yeah, I think we've covered a lot, and I think a lot of good information. And it's great that you brought up the information about the mortgages renewing. I think that's going to give a lot of people something to think about, and it could be affecting people that are watching or listening, and they can certainly reach out and ask if they have any questions.
The good news is they know two really good realtors that can help them navigate through it. Right, Gordo?
Joe, and what's the other?
All right, buddy.
Awesome. Good job.